on Business Incorporated today. Kenya's forex reserves dips, hitting a 4-month low. South Africa to sell inefficient state ports. Angola credit to real economy hit $905.37 million. Hello and welcome to the program. I'm Amy John Mekwa. Let's go into the markets now. At intraday in Africa, it was mixed sentiment. Nigeria's all-share index was down 0.55%, while South Africa was trading in a positive 0.51%. Egypt was also in the negative at intraday at over 0.8%, and Kenya closed yesterday almost 1%. In the Middle East, Abu Dhabi surged 0.87%, while Dubai market was also up 0.44%. Saudi Arabia wasn't so good, but it was still in the bullish region with its all-share index up 0.10%, and Qatari index deepened the gains at 0.29%. Well, moving to Europe now, the pan-European stock 600 was around 0.1% lower during morning deals, with most sectors in negative territory and major bosses pointing in opposite directions. Auto stocks led the losses, falling around 1%. Meanwhile, Eurozone economy bounced back with 2% quarterly growth between April and June, following a 0.3% decline in the first quarter when countries were in COVID lockdown. Well, we're going to have details of that and much more as we have Conrad joining us from Frankfurt. Hello, Conrad. Good afternoon.
Good afternoon, Indy. It's good to talk to you. And hi to everyone in Nigeria.
Thank you. Hi to you too there. Well, the floods are back in the news. The floods which struck Germany in July and killed 180 people. Because their cost is going to be higher than anticipated. What do we know about that? What's driving these higher than expected costs?
You know, Indy, this is something we've sometimes already seen in the past. Insurance companies and reinsurance companies have a tendency at the beginning, immediately after, insurance claims payments are to be due, to estimate the amount too low. It's not perfectly clear why that is, but what I can tell you is that many investors on the financial markets don't like it. So it's a bit of a nuisance for the markets that while the companies talked about an estimated amount of 4.5 to 5 billion euros that is to be paid for the damages in the floods. Now BaFin, our German financial supervisor, says the amount is rather to be a little bit lower than 6 billion euros. Now, why is that important? The situation of the insurance sector is as important for the supervisors as the financial health of the banks. What's going on in the insurance sector really plays a role for how stable things are, whether money flows are okay, whether the insurance companies and reinsurance companies really can afford their business. And that's why, the companies should have reported earlier that they don't exactly know whether the 4.5 to 5 billion will be enough.
Well, going to China now, we see that the German business model seems to be doing well there. What do we know about this business model that is doing well in China?
Yeah, it's an interesting report from the financial news agency Bloomberg. It says that in recent days, an analysis written by Mr. Chen Li, who's a senior strategist at the brokerage house Suchao, it has gone viral on social media in China. What is it about? Mr. Li writes that China is slowly shifting away from copying the Anglo-Saxon business model, with the United States and its 11% share of manufacturing, the rest being services, retail, etc., more to something that resembles the German business model. We here in the country have 18% of manufacturing as part of our economy. The upside of the German business model, this analyst writes, is that if you have weakness in internal demand in the domestic economy, in services, for example, you can make up for this with strength in manufacturing and with exports. And other things are positive about the German business model, according to this analyst of Su Chao. He says that the way antitrust policies are implemented in Germany is interesting. Of course, here I have to say that antitrust policies are often handled on the European level, not only on the on the German national level. And also what the guy writes is that our model of mixing academic and vocational training when it comes to preparing young people for jobs is very positive. You know, here in Germany, people don't only go to schools or to universities, they don't only get abstract information, they also get training on the job so that, you know, they can learn things that businesses want from them. Of course, a couple of things are not interesting to copy for the Chinese. Independent trade unions is something that the communist country doesn't like, as well as, you know, giving up leadership by the government of global and large corporations in China. They like to grip or keep them in their grip.
Well, a whole lot of lessons there for even Nigeria to learn from, and I do hope that countries will take some of these lessons. Now let's focus on corporate stories. The Berlin-based media house Axel Springer is reported to be interested in the English language magazine Politico. How come? What's the connection?
Well, it's an interesting story because it shows that many large German companies are not limited to Germany and also not limited to the German language. Axel Springer already has a cooperation with Politico, which is originally based in Washington, but they have a cooperation with a team in Brussels that operates there. Also in 2015, Axel Springer bought Business Insider, which is an internet portal with news about the business world. Now, why is Politico interesting for Axel Springer? It is very avant-garde when it comes to operations on the internet with, you know, rapid-fire blogs, with early morning newsletters, but at the same time, very in-depth research and in-depth reporting of everything political. What the reports are is that Axel Springer wants to transform this corporation into a full-blown buyout because Axel Springer, which used to be a traditional publishing house with newspapers and books and stuff, is also shifting to the internet more and more, like we all do. All the media, I guess, in Nigeria, Channels TV as well, is having more and more operations on the internet because more and more of the people, the audience out there, follow us on the internet and on social media.
Yeah, well, talking about the new normal. Well, thank you so much, Conrad, for giving us updates from Frankfurt, and enjoy the rest of your day.
See you again.
See you tomorrow. So we'll move over to the UK now. The United Kingdom has unveiled a $5.5 billion hydrogen spend to power industry to hit net zero goals. The government published its long-awaited plans for a UK-wide hydrogen economy, which it says could be worth £900 million and create more than 9,000 high-quality jobs by the end of the decade, rising to £13 billion and 100,000 new jobs by 2050. The strategy document lays out its efforts to attract investments in 5 gigawatts of hydrogen production by 2030. It suggests hydrogen could cover 20 to 35% of UK's energy consumption by 2050, providing a clean alternative to oil and gas in energy-intensive industries, power and transport. About 3 million households in the UK could begin using low-carbon hydrogen to heat their homes and cook rather than fossil fuel gas on the government proposals to attract at least £4 billion of investment to the hydrogen economy by 2030. Still in the UK could increase aid to Afghanistan by just 10% after cutting aid by 78%, having recently cut direct assistance to the country by more than 3/4. The Foreign Secretary said the UK would now reconfigure its budget to Afghanistan following the dramatic collapse of the country to the Taliban at the weekend. A development they admitted caught several nations by surprise. The UK and other Western nations have come under increasing pressure to offer help to the Afghan people following distressing scenes at the airport on Monday, which people desperately clung to planes in an attempt to flee the capital, Kabul. And exports of goods rose by 1.1 billion pounds to Britain, and import fell by 2.5 billion euro in the first 6 months this year, as companies rush to adjust their supply chains across the Irish Sea following December's hard Brexit deal at over 6.7 billion euros. The total value of goods export to Britain was up 1.1 billion euro in the first half of the year from the same period in 2020, while imports fell from Britain sharply by 2.5 billion euro to 5.3 billion euro. These year's figures may also point to changes in supply chains within the island of Ireland, and potentially to a strengthening of the all-island economy. According to CSO, exports to the North Form, the Republic rose to over 1.5 billion euro in the first 6 months from 1.1 billion euro a year earlier, while imports also rose to 1.7 billion euro in the same period from around 1 billion euro a year earlier. In June, exports to Britain rose 575 million euro to 1.4 billion euro from June in 2020, helped by increases in chemicals and machinery, while imports in the month from Britain fell. Now going to the markets now, the FTSE All Share was trading in the positive at intraday. It was up 0.12%. The FTSE 100 was also mildly positive, 0.10%, while the FTSE 250 was up 0.24%. In the currencies market, the pound declined against the US dollar, 0.34%, down against the euro, 0.27%, and also down against the Japanese yen, 0.40%. Moving to Asia now, shares in Asia Pacific declined today, with Chinese internet stocks in Hong Kong falling again as regulatory fears resurfaced. By market close in Hong Kong, shares of Tencent dropped 4.14%, while Alibaba plunged 4.77%, and JD.com slipped 5.16%. Hang Seng Tech Index slipped 3.13% to 6,218.89. Hong Kong's broader Hang Seng Index fell 1.66% to 25,745.87. Mainland Chinese stocks led losses regionally by their Tuesday close, with Shanghai Composite slipping 2% to 3,446.98, while the Shenzhen Component dropped 2.33% to 14,350.65. In Japan, the Nikkei 225 closed 0.36% lower at 27,424.47, while the Topix Index declined 0.49% to finish the trading day at 1,915.63. South Korea's Kospi declined 0.89% to close at 3,143.09. The S&P AX 200 in Australia slipped 0.94%, closing at 7,511. MCSI Products Index of Asia Pacific shares outside Japan fell 1.32%. In Wall Street, stock index futures fell in early trading after the Dow and S&P 500 closed at record highs during regular trading yesterday. Futures contracts tied to the Dow Jones Industrial Average fell 235 points. S&P 500 futures shed 0.5%, and Nasdaq 100 futures lost 0.4%. Dow member Home Depot fell 3.5% in pre-market trading after reporting second quarter results, and this was knocking futures. Dow and S&P 500 posted their fifth straight positive session yesterday, rising 0.31% and 0.26% respectively. We'll take a short break now. When we come back, we'll head straight to the African continent. To stay with us. Welcome back to Business Incorporated on Channels Television. Now let's head to the commodities market. And it's said that diamonds are a woman's best friend. I can say that. Diamonds and pearls are known to be the highest level of jewelry in the luxury goods business. The extraction of diamonds is known to be one of the most energy-intensive consuming processes and to be detrimental to society. The prevalence of blood diamonds in countries such as Liberia, Sierra Leone, and Angola has continued to taint the reputation of the diamond industry. There's a strong link between resource nationalism and violence. Well, joining us to discuss this now, we have Isaac Adekoye. He's an analyst at Financial Derivatives Company. Hello, Isaac. Good afternoon.
Hello, good afternoon. Thanks for having me.
Yeah, you're welcome. So diamonds is the woman's best friend. I don't know what is the man's best friend.
It's a bit difficult to say for men, isn't it? But yes, yes, indeed.
All
Diamonds
right.
are in fact the woman.
Yeah. So with extracting companies experiencing new corporate governance and now being held to ethical and sustainable standards and the recent awareness on climate change, what does it look like, the future of diamonds in Africa? What does it look like?
Well, the future of diamonds in Africa is still bright, considering that Africa is responsible for 50% of the supply of diamonds in the world. So we're still looking at a bit of bright future in that sense. But when you look across Africa now, we're looking at situations where there is a stronger democracy, stronger clamor. People are looking into the mining industry and talking about transparency, so talking about corporate governance. People are also looking and demanding for better wages and compensation for the miners. So you can see that in that sense, we can see a little bit of effect that that might have on the mining and extractive industries. Then you look recently, the U.S. Treasury said that they were no longer going to be funding fossil fuel related projects. And when you consider the carbon footprints that these fossil fuel related projects might have, is very similar to the carbon footprints of the mining industry. So we could easily see maybe this funding stance extended towards the extractive industries in Africa. Then you also look at recently, there has been a growth in sort of like factory made diamonds. So that's actually an interesting development that we've seen recently. But still, while these factory made diamonds could look similar to actual diamonds, they actually have not the same resale value. So in that sense, there's no competition with the diamond industry yet. But then again, with this new awareness and consciousness of the world where people are demanding more greener, more stronger corporate governance and all that, we could easily see a shift in the value of those. But then when you now look at Africa as a whole, you'd see that extractive mining is actually taking a hit in the sense that surface diamonds are becoming scarce. So you see that in the future, you have countries like South Africa and Botswana, they might see their share of global output and even regional output of diamonds drop because the surface diamonds are becoming increasingly rarer. So mining is now going deeper and people are having to spend more to acquire these diamonds. And then when you look at the fact that Botswana, for instance, has 22% of its GDP is tied to these diamonds and the extraction industry, then that could actually affect its economy and its GDP.
All right, and there's usually an inverse correlation between the value of the dollar and the prices of precious metals, of course, with diamonds. Now, how has this correlationship, how has it affected the metals market?
Well, so far, the relationship is still going strong and is still valid. Because of the high inflation in the US, we're still seeing that investors are still flocking towards gold. In fact, not long ago, we saw gold reach an all-time high. But the good news for investors now, though, is that there are now more safe haven assets that are available. So we have diamonds, we have precious metals. But apart from those, we now also have sort of stronger stock markets that can help hedge this. So we have stocks sort of in the biotechnology space, we have stocks and utilities, which still can be used as a hedge against inflation and still provide investors with this. And surprisingly, we still have things like Bitcoin, which could even offer investors that same level of safety in terms of hedging against inflation. So that correlation is still there, is still strong.
Yeah, when you mentioned Bitcoin, the picture of mining also came to my mind because I know there's also controversy around the mining of Bitcoin. Well, that's a topic for another day. A major one is actually the issue of blood diamonds. And the issue is that the profit is not retained in the countries with which these resources are. Does this fate await Nigeria as it delves into the precious metal extraction arena?
I mean, when we look at Nigeria, we have to look at the extractive industry. We've seen what played out with oil, and then we've recently seen the PIB bill. So, in order not to have this fate of blood diamonds and all that, in order not to have Nigeria go down that same path, what we would actually have to see is strong corporate governance. So, we have to see a situation where the government would actually come in, take a stand, and incentivize the locals. You know, one of the major importance of the PIB bill was how it was able to say that, you know what, the community are also stakeholders. It also involved them in the equity process. So we have to see that with the extractive metals industry. We need to look at the host communities as part of the processes. So the government needs to come in, take a stance and create bills, create structures that incentivizes both the host communities, incentivizes the investors as well, who will be coming in to, put investments and all that. We need to see the government take a stand and say, you know what, we can create structures that would ensure that everybody across the value chain is adequately taken care of. Then you look at another important point would be in the part of child labor, in the part of policing of these mines. We need to ensure that in these structures, in these bills that we're creating, that these things are clearly stated and they are clearly accounted for. So there is no misrepresentation or there are no loopholes that maybe people could take advantage of when actually looking at the extraction industry. Remember that the extraction industry has a very strong ecological footprint. So we need to ensure that the host communities are adequately compensated.
Yeah, we do hope that Nigeria will look into that and learn from, Botswana and some other countries as we delve into the extractive. Well, thank you so much, Isaac Adekoye, analyst with Financial Derivatives Company, for sharing your thoughts with us this afternoon.
Thank you.
So moving on now, Kenya's foreign currency holding declined to a 7-week low, and this prompted the Central Bank of Kenya to spend $26 million last week to cushion the shilling from volatility. The foreign exchange reserves fell to $9.29 billion on August the 13th from $9.35 billion on the 5th of August. And this decline has largely been attributed to payments from the government. According to the CBK, the forex reserves are adequate to cover 5.68 months of imports, down from 5.72 months of import covered the previous week. And in South Africa, state-owned freight company Transnet is moving ahead with its 100 billion rand expansion plans for the port of Durban, issuing requests for information, solicitation for potential private sector investment partners. The upgrade of the port is aimed at improving efficiency at one of the country's key drivers of economic growth and is a sign of government's commitment in improving its logistics infrastructure. Public Enterprises Minister, speaking at a webinar, addressed how this potential investment will be beneficial not just for Transnet, but for the economy as a whole.
These plans, as they move to the execution stage, will create huge opportunities, both currently and into the future, to respond to the increased volumes that need to be exported, given the increase in demand for commodities from South Africa, and also the increase in prices, which is bringing in extra revenue from a tax point of view as well. We have an opportunity to work as various role players to create an appealing investment climate, notwithstanding the events of July, but also to give small and medium-sized businesses in South Africa who have the professional and technical capability, and there are many of them, to play a role and grow through this process of participation as well. These are also massive investments in the economy, both from Transnet itself and South Africans and overseas investors, which is quite important in order to demonstrate confidence in our economy, but also improve the infrastructure in relation to the logistics system in South Africa. The direct impact of this will be to boost job creation, particularly for young people, to provide training for youth in new maritime skills, and to create opportunities for Black businesses where there are many professionals who are looking for opportunities to actually make their entrepreneurial spirits more effective in the kind of climate that we actually find ourselves.
And in Angola, the National Bank of Angola has announced that loans granted to the real economy stands at $905.37 million, which represents an increase from the previous quarter. According to the BNA, the amounts disbursed by commercial banks until July totaled $505 million, up $48 million, or 10.4% compared to that of June. In general terms, the amount approved by the banking sector until July corresponded to 324.7% of the minimum amount to be granted until the end of 2021, with the amount actually disbursed representing 183.5%. Well, oil prices rises on expectations that OPEC Plus will not boost supply soon. Oil prices rose, recovering the previous day's losses as investors sought bargains and on expectation that major producers will not boost supply soon. The fears of weaker global demand amid surging pandemic capped gains. Brent crude was up 13 cents at $69.64 a barrel after falling 1.5%. U.S. oil climbed by 14 cents to $67.43 a barrel, having lost 1.7% the previous day. U.S. shale oil output is expected to rise to 8.1 million barrels per day in September, and that will be the highest since May 2020. Well, that's the program for today. Thank you so much for watching Business Incorporated. I'm Ini John Mekwa.